So if this is your income, and let's say that you have $1,000 going out to rent, and let's just pretend that you have a $500 car payment. So this is your rent and your car. We'll say the going rate for expenses, usually like food, gas, stuff like that, runs about $1,300. So let's just add $1,300 on there. So we'll minus the $1,300 off. This is just living expenses. It also depends on what part of the nation you live in, because I am astounded at how, like I said, Illinois, New York, and Kansas City, or Kansas in general, I guess, North Dakota for sure, and then California, the house payments are astronomical compared to what I'm used to. So, wow, bless you all for being able to live in that, and only, we're talking $4,800 a month, and you can make a $2,300 house payment. I don't even know how the banks loan out huge house payment or house loans like that with such a small income to cover it, because I think it's 45% DTI is, if I'm not mistaken, when they do a home loan. So if you subtract all of this out of your $4,000, you're going to have $1,200 left over. Now, a lot of people don't sit down and budget their money. They don't sit down and look, because you know what? They're afraid to. I have been there and done that. I was like, if I sit down and figure out what my expenses really are, I'm going to be sick at my stomach, because it gets overwhelming when you know that you're a spender, when you know you eat out too much, when you know that you just buy too much. You're afraid to sit down and add up those totals, because you're going to come into a reality check, and we don't like that. We don't like the truth of what is really happening with our money. Let's pretend this is your second position HELOC. It doesn't matter. This could be a credit card. This could be a second position HELOC. But regardless, you're at your limit. You've got a $3,000 balance on it. So, of course, your rent and your car payment would have to stay out in cash, because unless you're going to use plastique or something like that to take cash off of your card, you will have to leave these out as cash, okay? Am I clear? Because I have people tell me all the time, you're forgetting the house and the car. No, I'm not. I'm saying it has to stay in the bank, because you cannot pay rent usually. Although I did have a woman write me yesterday, day before, and she said that she was so glad she had watched my video about paying everything with a credit card, that she found out her apartment complex took credit cards, and she was so excited. I mean, I could just, reading her words, she was so excited that that had been brought up and that she was able to do that. And she said now she can put all of her income into her credit card and then pull out all of her expenses, including the rent. And she was so happy about that. So I am so happy for you too if you are on here. Okay, so leaving these out, we would take the expenses, which usually all expenses can be paid with a credit card. We're talking about food, gas, utilities, subscriptions. So anything that expense-wise that will be paid with a credit card, you can deposit straight into here. All right. Oh, well, hold on a minute. So this was our cash flow, right? After we got done with taking these two out, then we would add these two in, which would be the $2,500 that you're going to make of the deposit into this. So you would turn around and put your $2,500, which, let me say again, this is your expenses and your cash flow. So everything besides these two payments will go into your credit card or your second position HELOC. So when this moves over, look what it takes your balance down to. So at $500, you have just cut out so much interest that you were paying on $3,000. So if this was a 21% credit card, let's say, so you were paying $51.78 a month in interest on this card. And so your payment was probably $150 maybe. So I don't even know if it would be $150 for $3,000. I don't know. It depends. Different cards are different. You're paying $8.63 a month. See the difference? Now, the banks go on the average daily balance, meaning one day you would have $3,000, the next day you would have $500. Then the next day you may buy groceries, and then that would be $100. And then the next day you may pay your car insurance, and there's another 100. And then the next day you may buy gas, and there's 50. So you see what I'm saying is every day is a different balance possibly. The banks will average that out, and then they will charge your interest based on that. So back to what I was doing here. So you're at a $500 balance. After your expenses come out, which is right here, $1,300, and now this is by the end of the month, you're going to be back up to $1,800, right? Well, isn't that so much better than $3,000 that you've been letting that set out for 3 years, paying your minimum payment? But what happens next? You come in and you're going to make another cash payment. But looky there, you can't put the whole 25. You can only put 1,800. What happens after that? Throughout the month, you have $1,300 come in for your expenses, and you have $1,300 go out the next month. You'll have the little bit of interest to pay. Are most HELOCs simple interest? And yes, most HELOCs are simple interest and are not amortized. So if you have a mortgage and you make a $1,000 payment, let's say a $1,500 payment, because that's more like it. When you make your payment, it goes into this balance and it's gone. You can't reach back over. I don't care if you had a medical emergency. You cannot reach into that HELOC and say, hey, I need 500 of that 1,500 I just put in there. They would be like, dude, are you crazy? Refinance, right? Why do they want to refinance? Because they get to reset the whole loan, and they get all that interest that you've already paid. They get it all again. So that's why they want to refinance. But that takes time, that takes additional application fees, that takes a new appraisal on your home, all kinds of expenses there. So with the HELOC, it's called open-ended. This goes for a HELOC, any line of credit, PLOC, a BLOC, or credit cards. $1,500 goes in, it knocks your balance off. You have an emergency, you can go right over here, grab that, and pull it right back out. With a HELOC, PLOC, BLOC, or credit cards, you cannot do that with a mortgage. Does that make sense? I think that was the most telling thing to me, and people will say to me all the time, you're just being ridiculous. Just tell them to make extra payments on their mortgage and it'll pay off. Well, duh. I keep saying that. It's like, well, hello, if we could just make extra payments on everything, then we wouldn't have any debt. Nobody would, because, well, we'll just make extra payments. Are you disciplined enough to make extra payments? And if your cash flow a month after you pay all of your expenses is $1,500, are you really going to just throw that into the mortgage and say, oh, here, I'm not going to need that. I know I'm not for the next year or probably 3. You just go ahead and take my money. No, that's ignorance. That's why people are stuck in mortgages, car loans, student loans, is because they don't understand that if you just grab you one of these, transfer your amounts into this, transfer your income into this, pull out what you need to survive, leave your paycheck sitting in there. VIP calls it paycheck parking, and I think that's pretty cute because it's literally, I don't know if that's their term or not, but they call it paycheck parking. And that means that you just park your check there until you need it again. You just let it set on that balance. You keep your interest low because you're keeping the balance low. And eventually it'll pay off with your cash flow. Yes, you have to have cash flow. Most people have cash flow. We just feel like that we've got a noose around our neck from where we are just paycheck to paycheck, and we don't realize that we can do the little things like transferring these big loans over. We don't realize that with that $600 credit card I just showed you, you can wipe out that payment just by doing an income transfer. So there's so many simple ways to stop the paycheck to paycheck feeling. I think that that's my most satisfied clients is when they realize that they didn't have to be paycheck to paycheck or stressed out.